Good evening, everybody. This is Dennis Wilburn from the Active Trend Traders. Most of you who joined us today for the How to Make Money Trading Stocks Market Stock Talk show have already seen that the recording has already been posted to the websites and various YouTube channels. Well, lo and behold, as I reviewed and as the video processed itself, I found, guess what? I inadvertently had stopped the recording prior to going into the individual stock reviews, and we've had lots of comments back from folks saying that they really enjoy the actual stock review, stock analysis portion also. And so, although this is a free service that David Grandy and I do, I do feel an obligation to go back and re-record the actual stock analysis. And so I went back and took a look at the transcript, and I've pulled down all the stocks where questions were asked, and I'm going to provide an analysis of those and then post this video just shortly to the internet. So let's get going. I want to remind everybody that all the material that we do present always, both David and I, is for training purposes only. We do not make recommendations. We simply say, here's what we're trading. If you choose to parallel trade with us, that's fine, but everybody is responsible for their own risk management. And I encourage all traders that they should paper trade any new method prior to risking their own capital. So let's go directly to the charts and get started. I closed today's session off talking about three stocks that have some potential that were high on my list that I'm looking at going into next week. One is VDSI. What do I like about VDSI? Well, one, it has held the 8-day moving average and did a really nice bounce. In fact, it rallied into the close. And so I'm going to be looking at this on Monday for a potential entry. If we retest down into this body, that may provide us an entry opportunity. It has already had earnings. Earnings is behind it. And so while, yes, it is a huge swing and a volatile type stock, if the uptick in the volume that took place to burst it out on its earnings will kick back in. As you can see, volume has kicked back in. Momentum is up nice. It's just starting off the bottom here on the true strength indicator on the weekly chart. And so it has the potential of at least hitting 30. It's a couple of bucks away. And it could be up here pushing towards, the 3150, 3170 area. So we'll be watching this one on Monday. The next stock that we're looking at is ALK. ALK, we were trying to get into this stock almost all week long with, and it just we came just a little bit short of getting into the stock as it was bouncing. But it puts in a bearish engulfing yesterday. However, today it closes with, it's not really a piercing line, which is a bullish reversal signal, but clearly it found support at the 6230, 6250 level, and it's pushed back up. We'll see if it holds the 8-day, and we'll try to design a strategic trade around that area. And we're looking at hard to be able to trade this on Monday. This also has the potential, if it breaks out of this slight downtrend as it builds up the right side of this cup, well, the upside from where it's at up to past highs, which because it is in an uptrend, we can look towards that being the ultimate target. But if we break out from here and go back to the past highs, it's about a 10% gain. And typically, and this is something I didn't have time to share today, but typically the period it took to get from here to here, which is its low, is normally a normal market condition is approximately the same time it takes to get from here back up to the past highs. And so that would put, if it maintains that same trajectory, that if it mirrors the trajectory coming down, going up, and that puts us back up at around $70 in the March 10th, March 9th, somewhere in that time frame. The other stock I was looking at was Habit. Habit is building a base and continues to look good. It, as you can see, the 8-day has broken slightly above the 20-day moving average, but look where it's running into issues. It's running into issues right there where you would expect it to, one at both the downtrend line, which connects these highs, and the 50-day moving average, which is slightly turning down. But it's building. We'll see. The volume hasn't really jumped on board yet, and it has earnings over here about March, I want to say March 5th. Let's see if that says March 5th. Yeah, well, March 10th. And so we have several of these restaurant-type stocks and some of the retail stocks that are reporting out the first and second week in March. That's what we're watching those. Now let's get on to the stocks that you guys requested that we take a look at. Habit, not a habit, but Grubhub. This has been a stock that has been on or rising on the radar of Investment Business Daily. Right now, Grubhub just reported earnings, is bursting up, and now is kind of doing the initial part of a cup. It's on a weekly chart on the right, and so we've retraced up into the upper half of the cup, and so we'll see if we push higher and then put in a handle, or it needs to break out above this level legitimately to break out of the cup. However, keep in mind its previous highest close on a weekly basis was right there. And we pay attention to that because while the wicks show where the intraday or interweek prices went, that reflects an actual close. The bodies of the candles reflect where the prices opened and closed. So that particular week we did open there. So that would be a opening or a closing high, and the rest of them would be interweek. And it works the same way with the daily candles, in that the bodies of the candles tell us where they opened, where they closed, and the wicks tell us the path the particular stock went during that time frame. On the daily chart, if we roll back here just a little, bit, what we'll see is that past high relates to this right here, where we actually had a close. That was a burst 45, and that equates to this number, approximately right there. Actually, it was up in here because it didn't maintain that high. So what we can do is actually draw a price line in here and let that reflect over to the weekly chart, and I'll show you that's where we had our highest close, and so that's the strongest level. There is strong resistance there. So right now, Grubhub, it is a wait for a pullback. SLCA. SLCA is one of those oil-related stocks, and we're seeing a lot of potential move for the support type stocks and also the master limited partnerships for things like pipelines and those type of things, which people are starting to discover that those particular energy-related or oil or natural gas-related entities are really not connected to the price of either natural gas and or oil. What they do is they charge the oil producers a fixed amount for the volume of the product that's put through their container, whether it be a ship, whether it be a pipeline. And so what we're seeing is some really nice type moves as oil kind of bottomed over the last couple of weeks, at least temporarily. I think people are taking a second look at some of these other providers. Silica has earnings coming up on the 24th, so I wouldn't be looking to enter this stock at this time, but I would certainly keep it on my radar for a potential nice scoop bottom. And if it did run from here, back up even halfway up from its decline, you're talking about one heck of a return. I mean, if it got all the way back to the highs of 673, you'd be talking about 120% return. But even if you only get like halfway or back up to this past resistance support zone, you're looking at about a 30% gain on this particular stock. and it is prone to gapping, so we'll keep our eye on that going into next week. Next, one of the other stocks that I'll mention just real quick, GLOG is one of those additional stocks that is like that. This is a liquefied natural gas shipping company. They own ships. Again, their pricing is not dependent upon the price of the product that they ship, but they have been punished along with the decreasing price of oil, and because it's energy related. As you can see, it has been trying to hammer out this base since about August of last year. Got good support down here about 16 bucks, and it is really trying to push its way back up, and perhaps start on this new consolidation. It could very easily hit 22. It has earnings coming up on, I want to say the 27th, which is next Friday, before the market closes. Correction, before the market opens. What else we got? HCLH. HCLH. Why didn't it like that? HC. What is it? Here's HCHC. I may have missed that one, folks, when I was writing it down. Or was it HCLC, perhaps? Nope, it wasn't HCLC. I'll take a real quick look at the, if I still have that available, I will take a look at that, and I do not, sorry. So that one we're going to miss out on. F Froggy, I love this ticker symbol. Again, FRG, Fiesta Restaurant Group is going to write me and tell me what brands comes under that group. Fairly new entity, as you can see. It goes back, came public back in 2011. It has been on a constant tear. It has run up from its lows back in 2014. We are up 94%, and it put in a nice little base here. It this last sell-off, it hit about 1.7 million shares, and that is way above its average. This normally would be a stock I wouldn't really pay attention to because it has such a low volume. But it looks like it had great earnings, and then they didn't like something the following day after they digested the information. This is a bearish engulfing pattern. If you are long this stock, you can either do one of two things. You can draw a trend line up along this line here, connecting those lows, and if, depending on where you get in, if that is violated, you can close because that coincides right directly with the 50-day moving average. If you're looking to get long the stock, you're waiting, you're looking for a pullback, and this candle today is a bearish candle. It is almost a bearish candle on the weekly chart. You can definitely see where this long wick, good upward move, but it didn't hold the highs, and the sellers came in and have pushed this, pushed this down, almost removing half of the gains that was gained over the earning period. So trying to figure out which that HCO. I'll take a real quick look at it. Z F G N. This afternoon we looked at this a little bit earlier today. Real low volume stock. Wouldn't qualify to get onto my watch list, but I would have to do the the stock checkup on it on the IBD watch IBD website just to check the fundamentals on it. It certainly has, a good range. The black line here, this envelope, is 10% above the 20, and this is 10% below the 20. And so it has made a nice run up, almost 100% in a very quick period of time. and it does show us some, it does show that it puts in some nice patterns. It looks like it's digesting right now, and it may come out of this little scoop pattern and break out and go higher. It has earnings on 2/24. If you are in the stock, depending on what your profit cushion is, you may look at taking some of your profits off the table. SAVE. Spirit Airline. Spirit Airline has past earnings on a longer term chart. It is kind of putting in a cup kind of pattern, as you can see right here. It is pushing higher back up into the old resistance level, and you see this gap right here? That is a complete area of resistance from this high here to the low of this day here. And as you can see, as the price has gotten into that zone, the resistance has taken over and it's pushed up to the top of the zone and then pushed down. And so it may be trying to break out because it does have an uptrend going on, at least short term. I'd like to see the 50-day moving average turn back around and get up, kick off into the upward direction also. Oh, Dennis. There we go, data. Tableau software. I always take a look down here at the earning, the volume first to see if it qualifies, and I'd have to go and take a look at it from the stock checkup to see what kind of fundamentals it has. It's past earnings, and now it's holding at the past highs. And so that means either one or two things. Either this is a huge cup that's been going on for several, for well over a year. And so it hasn't quite reached the total high here, so we may get a pullback that would be a handle, making this the buy point, or we actually may get some just consolidation in this area between 92 and 100, and that is about but from 92 to 100 is about an 8.5 or 7.5%, a $7.50 range. And so we just need to watch this and see what it's doing. It needs to do some pullbacks because it is large, it is extended from its 20-day, which is here. And typically when stocks get extended over 10% above their 20, they start to slow down and rest a little bit and maybe even do a pullback. And we would be looking for a potential pullback here because we've had so far two failed breakouts to get above that high. Okay, we have VEVE, V-E-E-V. VEVE on a nice little tear, short-term uptrend. That's been going on since the beginning of the year. And this is one of those. This is a perfect example. I want to point out to everybody. This is a perfect example of the time it took from this high here to this low. If you reverse that, it will be approximately the same time period, give it a few days, a couple of weeks, back up to the same high. Now it has earnings coming up on, I would say, March 3rd. And so it looks like it's continuing to climb. For me, yeah, the individual volume per day is within my parameters, but I need a stock checkup on this. And so it may do a pre-earning run. So look how it has respected both the 20-day and the 8-day moving up. So if it comes down to and bounces below the 8, one could actually design a strategic trade with a conditional order to buy it going back up through the 8, with an expectation that you're going to run somewhere between, back up to 31.78, all the way up to approximately, let's say, 33 to 33.50-ish would be my ultimate target prior to earnings. Ruby. Remind me of that old country western Kenny Rogers song. Nice looking pattern, low volume, but as you can see, it came across, it broke out from here. You just connect those dots, and this is one of my favorite patterns to catch it early. If you can connect the highs, and it's putting in one of these nice little pullback flags, and then one of the conservative entry is to enter as soon as it breaks above that flag by 10 to 15 cents, or sometimes folks will go ahead and take the rebound. This is the low. This is the second, and it's a higher low. Once it breaks back up to the 8-day and or the 20, because they're so close together, that would have been another potential entry that could have been set up on a conditional order. If now that it is in place, we have earnings coming up on it's sometime next week. Come on, stop it. There we go. Earnings are 224 after the market closes. Yeah, it's an interesting little pattern. If it had a little bit more volume, like I said, I would have to run the stock checkup on it. So SLXP. Get rid of those drawings. SLXP. And sometimes when a stock gets beat up after earnings, which happened to Suggs Pharmaceutical back last year, and let's say that is in November, and they fall out of bed, occasionally you get this kind of reversal and it runs all up. This is not common, because basically if it gets beat up like this, it's going to fall, it's going to come up a little bit and then fall some more. And this is oftentimes what starts it into its huge downtrend. And as you can see, prior to earnings, this had already dipped below its 50. And it's not setting up for something ugly. But some good things, good news, something changed about the company came in. It popped back above 100 and held it several times. And you can see going across all these days here where it was holding the 100-day moving average, that became a new line of demarcation for a potential entry. And then it went on from there with a pretty good, excellent volume. And this last move up, this break of this little short time flag here, was done on increasing volume. So sometimes, occasionally, that is it's foretelling that somebody in the company knows something that is going to supposedly surprise everybody in earnings time. Our buddy Baba. Baba actually held up fairly well this week because it did absolutely nothing. It has already gone through earnings. I anticipated the news that was coming out on Baba over the weekend was that it was under investigation by the FCC, or the SEC, excuse me, SEC, under investigation, and that news may have already been priced in, because when Baba started falling from the sky over here and kind of started accelerating, you can sit there and look and go, you think somebody might know something. And so when they announced that over the weekend, which would have been on this day, you get a little bit of a sell-off, but it was like it was no news. So I have, an inkling that somebody in Baba knew. They're probably aware that the SEC was investigating them, and so that when the news hit, there was no reaction to it because it was already priced in to the stock. So for Baba right now, we are back at almost to the IPO lows, or after the IPO, where it put in this nice little pattern and bounced up and went from 85 to 120 in about 1, 2, 3, 4 weeks. And let's see if this area down here at 85 does hold, and see if it gets by any type of good news out of that SEC investigation. Might, and again, this is a might, this is a speculative might catapult Baba back into an uptrend. But right now, Just watch the stock, watch the chart, and it'll keep us posted. CYBR, great breakout, new stock. You know, it would have been super to be in it the week of the 9th of February, however, which would have corresponded to here, but that was just right before earnings. We wouldn't have taken that trade. But after it broke out, it has continued to push itself higher, and we need a little bit, you know, have to have some kind of respite in order to get a nice pullback into, you know, somewhere we can get a bounce trade off of this. For those who are the active trend traders who are at the our training this past week on candlesticks and the convergence of clues, that's almost a doji sandwich, or at least it looks pretty good, where you get a big up day followed by a do-nothing day. It's a little bit morphed. Maybe it's a doji sandwich without the crust because it pulled back down below it, but then it launched up from there. And so that was that's a pretty good trading signal, especially when it appears like a stock is overextended. Facebook has done some good stuff this week. FB did the challenge that I have with Facebook, and I'll just come right to it, is right now the Facebook, the range and the scale of its moves is not huge. It doesn't mean that it's not good, but like you'll take a look at this, at $5 for the week, today's move was $1.14. It has a very impressive looking chart. However, because the scale is smaller, there's potentially, especially if you're a shorter term trader, there's other entities to trade that are more attractive. At the same time, Facebook's not going away, and it has a very nice pattern. It broke out of this. You may notice this, recognize this as a double bottom, IBD double bottom base. One, up, two, a little bit slightly lower, and then it took off from here. And your breakout would have been at about just a little bit over 78. Look at about 78.50 would have taken that out. Early warning alerts would have been either entering here or down here off the bounce off of 74. Right now, if you're in Facebook, hold on for the ride, wait for the moving averages to catch up, and just if you get up into the 80, like up into the 81, 82 level, and you start showing some weaknesses as reflected in this type of candlestick action, take some of your profits off the table, because what we may get in Facebook is one of these where it comes down to a support at 74, runs up to resistance at 82, and if it will continue doing that, and you've seen that it has continued doing that for several months now, that trading range, if it maintains, stays predictable, can give you some nice trades, short-term trades. You trade it from the bottom to the top, and if you want to take it short, you trade it from the top to the bottom. QL. YS. QLYS, a nice breakout earlier in the week. It's got this is a lower volume stock, but its average volume is about just a tad over 300,000 shares. If you're looking at trading this, it is past earnings, and now it's doing its earnings consolidation dance. So just wait for the moving averages to catch up with it. If it stays up in this area, if you want to trade the stock, I would have to do the stock checkup on it to see if the fundamentals behind it were sound. Again, a little bit light on the volume to make it to my watch list, but it has a pretty nice upswing. And this is where just a real quick note on the range and the scale. See how on this particular chart, if this is 10% away from the 20 to the downside and to the upside, see how this is coming up and actually hitting those scales? Take a look back at Facebook, and you can see that 10% line 10% envelope, you can't hardly see it. You see a little bit of it over here, and that's it. And so that's when I was saying I like to look at a chart that where when I look at it, the that 10% envelope off the 20-day moving average is obvious. That doesn't mean you're not going to get a nice steady eddy type stock like ULTA. ULTA's pushing higher. You can almost draw a trend line right across these lows here, and as it comes down and just retest those trend line, excuse me, as it comes down and retests the trend line, it's got a couple of them here. And this is one thing about drawing trend lines. A lot of people think, well, okay, you can only draw them to major points and major low, like here's some are coming across here. But a lot of times I'll go here to the weekly chart, and I will start there, and I'll draw a trend line, and I'll connect the dots. And so I've got one trend line that connects these three lows. But then at the same time, we came down and made a new low here. So the trend line, and keep in mind, the trend line readjusts itself. So now I can connect either those two. And if I have the candles with the long wicks, sometimes I'll go to an earlier one, connect the bottom there. That gives me another picture of the trend. And then if I can see something setting up, like here's even a shorter term picture of the trend. Now, what's likely to happen if that's violated? Well, it's likely just to go down to this other, the lower trend line that's been in place longer and bounce off of there. But what these shorter-term trend lines can be used for is a line of demarcation to strategically design a trade for when the price gets down to that. If it rebounds from that, that tells us that our shorter-term trend is still intact and it still has some momentum behind it. So as I said, with ULTA, I think it is it? Yeah, it's pushing out to new highs, I think. Let's just take a real quick look to make sure. And that is a true statement. So it's pushing to new highs. You can draw this. Here's one of the breakouts that it did was here. And as you can see, it struggled to get above that 132.91 level. And so that becomes again, that line of demarcation to plan trades around. And with a breakout, oftentimes you will get a return or a retracement back towards it. Doesn't have to hit it absolutely, but back towards it, a little flag, and then it'll break up from there. So we've got a couple more here. What I'm going to do is just real quickly, let me check recents. No, that's an ugly chart again. But whoever had the HCL something, I'm sorry, I wrote that down incorrectly. So LUV. Love Airline. Love Airlines is kind of breaking up. Look at this nice bounce off support at the 50. And now it looks like it may go up there and challenge the 46 to 47 level. Earnings are already passed. And look at, this is one of the things that just keep an eye on as a technical analyst. That happens, it doesn't happen every time, but it does happen all the time. It had broken above this level of resistance here that it had struggled with for several weeks, and it broke out. Now this is what I'm talking about, how we broke out. We're coming back to retest that breakout. And this was a fairly significant retest. It's gone on for almost looks like 3 weeks until finally it looks like it's starting to potentially get some additional momentum. If some volume will come into the game, then Love Southwest Airlines could take off like a banshee. It is going to be hitting into the resistance up here at the 47.50-ish level. But that's starting up this little shallow, it's not a scoop type pattern, it's not a saucer type pattern, it's just like it's like a consolidation box type pattern that IBD talks about. So let's see here. Okay, we have one more, Sherwin-Williams. Sherwin-Williams already had earnings and is pushing to new highs and just continues to push higher, higher, higher. This again, another one of those stocks. This is a steady Eddie type of stock that has moved up from the middle of last year around October to where it's at right now. It has moved up from its low on that little pullback there. It's moved up 30%. Now that's in about a not quite a 6-month period, but about 30% from its breakout from this huge candle right here, hammer. It has moved up, well, it has moved up, okay, this was in, again, October of last year. It has moved up, what does that say, 30%. So this is one of those where it's not a barn burner, but it's nice and steady moving up. And this is one of those where you can draw a trend line in on it, and just when it gets there close to that trend line, or when it comes down in this case, it's respecting the 20-day moving average, and when it comes down that 20-day, that's the time to start looking for, and if your indicators, momentum indicators, and your true strength indicators start to turn back up, that's time to say, okay, it's time to go ahead and get into a position. Now, you're not going to buy the same position size that you would have bought down here at 220, but you can buy a smaller position, or if you're an option trader, you can jump in an option, because that option right there, that's on a daily, okay, that's a $7 move in about 6 days, and it goes on to a $10 move in 9 days, 9 trading days, and so that's pretty impressive. I mean, that's and I will guess, because the volatility on Sherwin-Williams is so low, that the price of the options would not be that a 6-week out type option at the money or slightly in the money, and because on a stock like this, I would not buy an out of the money option simply because it moves too slow. Its velocity vector is low, if you will. So, okay, hey, that covers the all the stocks that you guys asked about this afternoon. Again, I apologize for any inconvenience of not getting to see them the first time, but I'll get this posted up here shortly. I want to remind everybody that this week in the active trend trading, we'll be introducing a simple option strategy that starts this coming week for monthly and weekly options, and we'll be covering that in our midweek market sanity check training, and then we're going to also be putting in some new training videos by the end of February. If you're new and have not tried the active trend trader, we do have an introductory offer. Try it for a month for $4.99, no obligation. Gives you access to the training, gives you access to the text alerts, to all the email alerts on everything I'm trading. If you want to just jump past that and just get right in the middle of it, for members who come to the How to Make Money Trading Stock show, I offer a continuous 40% off regular membership, and you can find that at this website down here on the bottom. So with that, I want to say, let me see, I don't think I have, just the animation. So with that, I'll sign off for tonight. Again, I apologize for any inconvenience, and I hope this analysis of those stocks you're looking at will serve you well going into next week. Good night. Trade wisely, trade profitably. God bless.